Hello everybody, this is David Blair, the Crosshairs Trader. Glad you could join me. In this video I'm simply going to review the major indices and a few individual stocks, some things that us Crosshairs traders have been looking at and talking about. Just in the last couple of weeks we've been talking about the fact that the market's been pretty much going up without much of a needed rest. And so our rule has been, if you're going to trade lightly and quickly, which simply means do not take a full position as you normally would, but maybe a 1/3 position in a good high probability individual stock trade, or trade not at all. And if you do take a small position, trade quickly. And by that I mean, instead of looking at the stock continuing to trend for many days, possibly into a couple of weeks, that if it gives you a good percentage profit on any kind of options trades, 20-30%, it might be a good time to go ahead and take that if there's been a good surge in the stock over a few days. Simply because, again, the market, although we never know where a top's going to be, never know when it's going to stop, we don't want to miss some really good trades that are setting up. But we also want to be aware of the fact that when the market has been overextended and not had a rest for quite some time, it's not going to take much for it to sell off and give back multiple days of gains in a single day. And over a course of a couple of days to a week, it could give back a month of gains. And that's just the way the market is. It stair steps up and goes down on an elevator. I don't necessarily think that the news drives it. It's just we've come so far that it's just time for a rest. And so it's a matter of risk management, a matter of being aware of what's going on in the market, and not allowing our emotions to get away with us, and that we look at the charts and what we think is a there it is really a there it was. It's a case where we see potential trades and we want to jump on board simply because we look back at the charts and see that there's been such a big move, and our emotions say, you don't want to miss this move. Well, the move has already happened for the most part. So, not saying we're reversing and we need to start looking at down trades. It is just a time to be considerate of the market, allow it to tell us whether it's going to rest for a while, consolidate, continue the trend, or are we going to reverse and start needing to look at down trades. So those are the considerations that we have. So let's look at the major indices. For those who have been with me for a while, you know what we look at. We look at our major indices. We look at our futures to gauge an idea of general market direction and to help us determine high probability trades on individual stocks. We want the general market to be pointing out to us that, hey, here's a good time to trade. Here's a good time to trade up. Here's a good time to trade down. Here's a good time to set aside and do nothing. Here's a good time to trade very lightly. So, excuse me. So we're going to look at our weekly and daily chart. Daily chart is the smallest chart we look at. We look for big multi-day moves. So let's take a look at the futures to begin with. Let's take a look at the ES. Excuse me. On our weekly chart, we've had some resistance that we've had to be mindful of here. And if you haven't watched it, I did a video on the there it wasers, a couple of them, talking about how the general market is extended on the weekly chart. So any kind of trade but opportunities we get on the daily chart needs to be considered in light of the fact that the weekly charts have had such a big move, and that any time there could be a reversal. So when we look at the ES on the weekly, we've had a nice move here. Our moving averages aren't exactly lined up where we want them to be, which simply means that we could be entering a range here, possibly here, and we need really would be good to have a couple of weeks of pullback consolidation before we possibly continue to head higher, if indeed that's what the market wants to do. Don't know yet, but again, we need the rest. We're not surprised by this. Resistance goes back to October of '08. And what happens usually is when a market has an extended move, we crosshairs traders look at several different breakout scenarios, and the most recent breakout scenario here on the weekly is what's called an extended breakout. And when there's an extended breakout, we simply look back at what has happened before the breakout and see that there was a big move. And so in this kind of breakout scenario, we want to see it come back and test, prove itself, and then continue higher if that's indeed what it's going to do. So that's what we've been looking at as a scenario of an extended breakout. Okay, so it's best to wait. NASDAQ, same thing. We had an extended move. It did try to come back and test here. It did not, however, break its previous high. So we came back. We're in a consolidation area now. We're waiting to see if this is going to be a consolidation breakout, or it may become a corrective type situation where we head back down to another major moving average. In any case, we're in a situation now where we are consolidating in both of these. So let's take a look at the Dow. Again, the Dow peeked its head out above a resistance area from '08. You can see that here. But because it had had an extended move, again, it's one of those where you don't know how far it's going to go up above the resistance and then pull back, but you just simply need to be mindful of that in your individual trades. Okay, we don't try to find tops and bottoms. We're just aware of those areas, and these lines here are programmed into my TradeStation software workspace, and lets you know where the weekly support and resistance is. And you can see that on the daily chart here. So we've gone back below the weekly resistance on the Dow. NASDAQ is going to look just like the futures. Basically, we had a double top here. Could not break back out. Failed. And now it's coming back and going to try to consolidate again. And we are extended on the weekly charts also. All of these charts are going to show an extension here. It's not going to be surprising. Let's look at the Russell 2000. Same thing. We had a huge move. Again, there it was-er. Someone sees this breakout. That's an extended breakout here. Amateurs see that and say, oh, we're breaking out in new highs. They don't realize we've already come so far so fast. It's best to let it rest, and that's exactly what is going on right now. And the S&P, you can see it's hit resistance from the weekly chart as well. You can see that on my daily chart. It's already outlined for us here. But then when you go to the weekly, you can see that again from '08 back up to the resistance area. So with that in mind and looking at the indexes, let's just take a look at a couple of other ETFs. Let's look at the SOX, or the semiconductor holders, I'm sorry, SMH. You can see even the SMH has had a huge extension, needs a rest, stuck its head out. It's still above that breakout area here on the weekly chart, so we're going to have to watch it, see if it can hold there. At least consolidate in this area, and then maybe we could start having another move up, but that's going to take some time. The SMH gotten a little extended. That's why these intraday signals that we get, we don't take these at this point because of the extension on the weekly chart. So that's just something that you learn the more you trade. QLD, same thing. We've had a nice long move in the QLD, the ProShares Ultra. Moving averages are lining up here. However, we've got the resistance again from '08, about May of '08, that we have to be aware of. Again, consolidation would be a welcome benefit, I think, to the market. Okay. IJH, mid cap, same thing as the major indices. We've tried to break out again, couldn't do it. And again, when we look at the weekly chart, not surprising, as we've had a long extended move. With Crosshairs traders look at what I call candle counting, and we've had a very, about from this point on, just a very high candle count, which has made us either not trade or trade very, very lightly and not take on a lot of positions. It's just money management, period. That's what separates the really good traders from the emotional amateur traders. And the last thing I want to look at is gold. You know, gold skyrocketed Friday due of course to market saying to the unrest over in the Middle East, Egypt area. But you can see we've had an area of consolidation that started back here in October of last year. After a nice long trend, we started the consolidation. We've got some resistance up here from the weekly chart. Here's some support from the daily chart, support down here from the weekly. So basically right now we're in a consolidation area with gold. This is a GLD, gold ETF, but we'll be watching it. You know, the longer this consolidates, the bigger this move could be if it decides to start trending again like it did back here in August and again back here in May of last year. Okay, but it can consolidate for some time first. But it may be hitting an area of support. We won't know it for a while yet. And again, we do not trade tops and bottoms. We trade middles, so we'll wait and see what's going to happen with GLD. For those who are in Crosshairs trading premium section, we'll discuss some individual stocks for those interested in joining us. Please let me know at david@crosshairstrader.com. If not, I'm always going to have my free videos and my free blog posts, and I'm so glad you decided to take your time to spend a few minutes with me and listen to my humbling opinion on the stock market, because we all know the stock market can do anything it wants to do regardless of our wonderful technical analysis skills. Y'all have a wonderful day both in and outside the market.